Hey guys, what's going on? Welcome back to the channel. It's Rekt Capital. Welcome to today's video update. We're going to be talking about the crypto money flow cycle, and this is going to be based on my article, which I published on my website yesterday on rektcapital.co. We're going to be talking about the herd mentality essentially, because investors tend to behave in the same way at the same time within a similar price context. So whenever we see an uptrend in Bitcoin's price action, we tend to see investor money flow go into Bitcoin. But as the uptrend starts to stabilize, we see investors start to behave a little bit more risk seeking. They start to diversify into smaller market cap altcoins, such as large caps in Ethereum, predominantly in Ethereum. So we're going to be talking about that money flow cycle, and it's fundamentally underpinned by human psychology. So the behavior of money flowing between different assets at a given time, the reason for this money flow is because of the psychology of the people who are actually flowing this money, who are moving this money. Investors tend to behave similarly in similar contexts. So in this article, I speak about a variety of different things, but we're only going to focus on the first part of this article, at least for today. And once we've covered that, tomorrow we're going to focus on the 2020 money flow cycle and the micro money flow cycles that we've seen throughout the year and where we may be in the crypto money flow cycle currently. So the money flow in crypto is quite simple in the sense that it cycles from fiat. First of all, you have to have pounds, euro, or the US dollar to be able to cycle your income or your savings into Bitcoin. And Bitcoin, of course, is the largest cryptocurrency. It is the king of the market. And whenever we see Bitcoin start to move, we start to see investors take on more of a risk-seeking approach and diversify into large caps, predominantly Ethereum. And then once Ethereum starts to stabilize, we see mid caps and low cap altcoins start to really take center stage, with low caps actually, whenever we see low caps rally, this signifies the end of the money flow cycle, and we see this money and these profits circulate back into Bitcoin, whether you're trading altcoins to BTC pairs and then away from Bitcoin into fiat. So it's interesting because we tend to see this sort of money flow cycle happen over and over again within a certain alt season, as we'll see in tomorrow's video. But generally speaking, this is a macro money flow cycle. So this is how a macro money flow cycle looks like, but we tend to see many micro money flow cycles within a macro money flow cycle. So in 2020, you could argue that we've actually seen 3 micro money flow cycles within the larger macro money flow cycle, but that's something we're going to be talking about in tomorrow's video. In today's video, I just want to illustrate what this money flow cycle looks like and the psychology underpinning this cycle, because if you understand the psychology, you'll be able to potentially predict that psychology, but above all else, follow that psychology. Because if everybody is going to be behaving in a way where they're flooding their money into Bitcoin, you can rest assured that that will precede a move into large caps like Ethereum. And throughout 2020, we've seen Bitcoin really lead the market. But if you look at the charts, you'll see that Ethereum has lagged a week or two behind. So whenever Bitcoin rallied and then started to stabilize, Ethereum would spend the next week or two actually trying to catch up with Bitcoin. So in essence, large caps, predominantly Ethereum, have been the lagging indicator for Bitcoin and just have been following Bitcoin in Bitcoin's movements. So if you see a Bitcoin uptrend start to take place, follow what is happening in the large cap space, predominantly Ethereum. Follow what's going on with Ethereum, because these have been quite tightly correlated. And whenever you see Bitcoin start to stabilize, Ethereum catches up. But if you start to see Ethereum stabilize, this is where you start to see money flow into mid-cap altcoins. And the thing here that we need to note is that going into Bitcoin in the very beginning, you can argue that crypto is a high-risk asset. But as we start to flow this money into smaller and smaller altcoins, starting with large caps like Ethereum, the risk increases, right? So people are starting to get a little bit more greedy because they want to have a higher return on their investment. They've been enjoying the Bitcoin gains so far, and they want to get a bit more and enjoy a bit more returns on their investment, so they start to diversify. And imperceptibly, with each passing week, you start to see more greed appear in the minds of investors as they start to behave more and more risk seeking. So imperceptibly over time, you see that their risk appetite starts to grow more and more as you see this diversification into smaller and smaller altcoins, finally ending in the high risk, high reward investments that tend to rally exponentially at the very end of the crypto money flow cycle, because this is where we see multiples. We see 2x's, 4x's, 10x's, even more, because these are really small market cap coins and they rally the most when people are most euphoric and most comfortable in circulating their profits into smaller altcoins. And this is a very, very risky situation, because you've built your profits, you've earned your profits from the large caps, the mid caps that you invested in Bitcoin even, and now you're circulating these profits into smaller cap altcoins. And that's where the risk lies, because you can lose a lot of those profits that you've made throughout the whole money flow cycle just by diversifying into those smaller altcoins, depending on that position size. But the way things work, people tend to really go hard into smaller altcoins at the end of the cycle when people are most euphoric, and that's the most dangerous thing, because people are lured by the fact that you might see X's, 10x's, 5x's, you'll see exponential rallies, which would further multiply the profits that you've made so far. So people start to build bigger position sizes, they go heavy into smaller cap altcoins, and this risk appetite is far bigger than what it was a few weeks back when people just started off with Bitcoin. So once we see a collapse in the market, altcoins, small cap altcoin movements start to precede this collapse and this breakdown and a corrective period, we see this money move back into Bitcoin. And whether we see a repeat of the money flow cycle once again really does depend on how much we've overextended in the market, because the crypto money flow cycle in 2020 has seen a lot of sideways channels, which were essentially reaccumulation periods before further continuation. And that's where we see micro money flow cycles occur, where you just see money flow from Bitcoin to large caps to mid caps to low caps, and then over and over again. We've seen this 3 times in 2020. But sometimes before a corrective period, you see the money flow into Bitcoin and out from Bitcoin back into fiat, where investors book their profits and just wait the market out. They exit crypto altogether. So that's the money flow cycle in a nutshell for you guys. If you'd like to read the article, check out the link in the description down below. Tomorrow I'm going to be talking to you guys about the crypto money flow cycle in 2020, where we'll be talking about the micro money flow movement from investors throughout this year. And having said that, that's about it for today's video update. Thank you so much for watching. Subscribe to the channel if you haven't already, and of course leave a like if you enjoyed the video. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.